you very much for joining the South African Chamber's interview series today, where we will be discussing real estate trends around the world with our panel of thought leaders based here in Singapore. So this is part of our wider initiative to bring value to our community while we are in this working remotely environment. And basically the initiative is to allow our members to contribute their insights in their specific areas of expertise to our audience. So without further ado, I'd like to thank you very much again for joining us. And today I'm joined by two of our members, and one of them is a board member. So good afternoon to you, Jason.lamb from IP Management, and Stef Potgieter at Savills.
Hi Mike, hi Jason.
Hi guys, good to be here.
So guys, if you wouldn't mind, would you just give us a little bit of an introduction to yourselves here, or self-introduction?
Sure, thanks Mike. It's Jason.lamb from IP Investment Management. Been here in Singapore for 4 years, and originally from Johannesburg. Spent 2 years in Ukraine, and now here for 4. And our company, we're a private equity real estate fund manager, regulated here with the MAS, and we basically do offshore investments in the UK, US and Western Europe in developed markets across sectors of student housing and residential. So yeah, good to be here and good to share thoughts and perspectives from within our company and what we've seen across the globe.
Thanks so much, Jay. Over to you, Stef.
Hi Mike, yeah, just a quick hello. I work for a company called Savills, London headquartered, FTSE 250 company. We employ about 35,000 people across the world, many of which are here in Asia. And a strong footprint really across the globe. We offer primarily different types of real estate professional services, whether that's property management services or in an agency capacity, or other professional services such as valuations, and really across all sectors.
Okay, and Stef, how long have you been here in Singapore? Have you been here a while?
I've been in sunny Singapore 4.5 years, so just about the same as Jason.
Okay, fantastic. Well, gentlemen, thanks again for giving up your time to speak to us today. So if I could open the floor to you with you, Jay, and just ask you the very first question of, given the current circumstances, how do you think real estate investment fits into an investor's portfolio? And has this changed since the pandemic started?
Yeah, thanks, Mike. I think real estate is a key asset to invest into, and one should always consider having real estate in their portfolio. And this is pre-COVID. I'll talk a little bit about post-COVID. But, it's always good to have a balance, and real estate should, make up 20-25% of a portfolio, and that shouldn't have changed. I think, in fact, during COVID, I suppose, as it was breaking out, you saw there was a lot of volatility in the markets. You saw, the markets fall off a cliff within a couple of days, and real estate values didn't drop. And this is one of the benefits to invest into real estate. It's not as volatile. Yes, it's not as liquid, but you don't have that volatility. So, I think it's important for investors to always keep a good slug of their investments in a fixed asset, and real estate is always shown to be one of the better ones. Obviously, I think you've seen liquidity is quite important, and some investors that may have been in real estate, they were long in real estate and then couldn't exit because they needed to, if they had calls or whatever the case was, then property can become a challenge. But this is the thing, it's about having a balance and not being overexposed. So I think it's actually shown to be real estate post-COVID to be even more so an important investment asset class to be exposed to.
I think that kind of stems in line with a lot of investment management approaches. It's just simply do not invest money that you can't necessarily afford to lose. And if you're going to be putting money away, ensure that you have a timeline in view for that capital of the portfolio. As you say, if you need it, property is not the most liquid, but then you shouldn't have been really looking to invest it there in the first place. Steph, do you have anything you'd like to add on that front?
Well, I was just going to say, Mike, we've really seen the same thing at Savills as well. In a low interest rate world, generally across the globe, real estate continues to be attractive. Residential markets have been very strong. Just with people looking to build up their next nest egg. A lot of people are spending a lot more time at home, and sort of considering what that means for them and their families if it's their own family home. And then, like I said, interest rates generally very low across the world. So we've seen the same thing. We'll get into some of the sectors in a little bit, but we've seen a little bit of a changing of the guard in what sectors are performing stronger than others. But as a whole, I think the real estate industry is performing very strongly.
Right. I think that brings us along nicely to the next question, really. And how is real estate performing in general? Jay, do you have a view?
Yeah, I think it's holding its own, real estate, and I think it's too soon to really see if there's going to be any big property crashes, and we haven't seen a property crash. We've seen hospitality taking strain, and that's because immediately there was an impact with the travel restrictions globally. So unless you had a contract with the government and you were able to generate income from quarantines, maybe helping with military or nurses or doctors having to use hotels in certain circumstances. Generally, hospitality has taken strain, and I know there's been a lot of activity and some big purchases that are going on globally. But then you look at office. Again, it's too soon to say what's happening. I think corporates are there's been a lot of fiscal stimulus. Banks are also being very helpful with landlords and owners of property and giving payment holidays. So in general, blood isn't on the streets. So I don't want to give away too much until we get to the next questions, because I think we can go into specifics on the sectors. But generally, the globe is handled from a real estate perspective, has handled well in the real estate space. And I think the fiscal support and the banks also being quite generous in terms of payment holidays, as I said. So that has helped.
I agree with you, and I also think, Steph, this ties into what you were saying about interest rates being low, where the banks are coming to the table and also stimulating the property market.
Yeah, that's right, Mike. And I think, just to echo what Jason said, if we're speaking holistically about the entire real estate sector as a whole, I wouldn't say we've seen a dip really, or certainly not a huge drop. I think what will be interesting to see is, in a lot of places, governments have come to the party, propping up, people's salaries, propping up, in many cases, waiving stamp duty, as we've seen in certain places in the UK, for a while. That's now phasing out again in some cases. So it'd be interesting to see if this kind of trend where real estate's really performing, especially residential real estate, is performing quite strongly, but just to see if that continues. But at the moment, we certainly haven't seen as Jason put it, blood on the streets.
But I think also the time, because it hasn't been any drastic, and this is where fiscal support, compared to GFC, there's this fiscal support which gives the economy time it's given the economy time and real estate time to adjust. So you'll see office landlords pivoting and changing their strategies, looking for different ways to generate income. Retail also, big empty shopping malls now, changing their strategy and bringing in different types of tenants. So I think it's given landlords time to absorb the immediate pain, but also to adjust and ensure that there isn't like serious blood on the streets down the line. So this is where it's just shown how fiscal support and we've learned from GFC this time around.
I mean, obviously, as a whole, it's a large industry with many sectors that could be performing or underperforming. So it's hard to say whether or not property is on a tear, or if it's going to be damaged or not, because you really have to dive into the sector and understand each sector in the industry. I mean, so I think also in terms of the government stimulus we've been seeing, it was nice to see on Friday that Jerome Powell from the Federal Reserve said we're going to be very, very gently turning down the stimulus. There's not going to be any knee-jerk reactions to what the Fed is doing out in the US, hopefully. And over the next 12 to 18 months, we may start seeing the effects of them turning back the stimulation that they've been giving to the economy by quantitative easing. So I think just that brings us along nicely to actually get into the sector. So Jason, you touched on the sectors that haven't really been doing well, such as hospitality. What in your view has been doing well?
Well, logistics and residential. I think logistics on the back of retail taking strain, particularly high street retail. Lockdowns have caused, people not be able to go out, so they thrive on feet. Shopping centers also taking strain. Maybe obviously your convenience or your essential shopping is done okay, but also then they've switched to e-commerce. And if so obviously now with e-commerce, there's a need for warehousing, greater distribution. So your last mile has become a key fundamental in the retail space, and so therefore logistics, warehousing, those have performed well, and rentals have held their own and gradually starting to tick up. Then on the residential side, I mean, people need roofs over their heads. So we've seen with our own portfolio where we we monitor this market quite closely. We see that there's been no strain in this market, and collections are high. Yes, there may have been some instances where collections, you've had payment holidays and at least landlords giving relief, but those collections are still coming in, and they upticking. So occupancies are good. We've got an asset in Manchester which we actually completed in April 2020, right in the middle of the pandemic, and we were worried that this thing wasn't going to let up, and now we're a year later and we're fully occupied, so it's becoming a stabilized asset. So residential will do well, is doing well, and there's also been a shift from city to suburban. So there's a demand for because people are working from home. And we'll cover this a lot more in our next series on working on the office environment and the new way of working. But people are shifting to bigger space because of the corporates are allowing this flexibility. So there's suburban residential is doing well. City will take a bit of strain, but I think it'll bounce back once people start going back to work. So there could be opportunities for buyers in that residential space in the cities, but then the other residential sectors, which is one of the other areas that we focus on, is student housing. And student housing, even during COVID, we've got a portfolio of student housing properties, and they were sitting at on average 70% let. So students still went back to uni. They still went to and paid their rental in their privately owned student rooms, and they just studied from there. They at least had a social life. They still engaged with their friends, and this is something now that took place during COVID, and we see now for the next academic year we're sitting at on average, close to 90% occupied, and we've got another month to go. Students want to go back to university. Yes, the UK has opened up, but even other parts of the world, that whole experience of going to uni isn't going anywhere. And student housing is backed by the education sector. And as long as there's an emerging economy coming through, and we see this all the time, middle class is growing. There's just more and more 18-year-olds coming along, and they all want to study. So student housing is definitely one of the best performing. And then senior housing also, we haven't gone into that space yet. But, with healthcare and, maybe COVID's caused a little bit of a disruption there, but generally, people are living longer and therefore you need housing for them. So that is also a performing sector. Sorry, I said a lot there.
All very good insights. I think also possibly it's not necessarily that the students want to get back to university, but they just want to get away from their parents.
True.
So, and that problem will forever exist. So I think Jason also just touched on the trend of commercial businesses, Stef, and people now wanting to move kind of away from the city with their workforce now working from home in a suburban area. Is that something you've kind of seen with the clients you work with?
Yeah, look, Mike, yes and no. I mean, Jason did a very good summary there, I think, of all the different sectors, and he's very right in saying that one of the earlier and most obvious winners was the kind of the logistics sector, as we're all ordering and ordering more things online than we did previously. But just touching on office space as a whole, generally speaking, yes, people are spending a lot more time around the globe at home, and that will, I think, have long-term repercussions on the office sector. What exactly that means, we'll discuss in our third video, but there's a lot of, it's pretty opaque, what that's going to look like going forward. Everyone knows there will be some change on the horizon. Everyone's trying to figure out exactly what that means. I think employees will have to show some flexibility. Employees will have to show that flexibility to employees. And I think Jason touched on it. We're seeing that with people looking to perhaps move further away from the cities. I mean, we've seen people leaving expensive Silicon Valley and buying, ranches up in Montana and this type of thing, because they're now they've now got the flexibility to go ahead and do that, basically, or at least for this kind of as we kind of get through COVID. But that being said, city office prime A landlords, generally speaking, while rates pretty much all over the world have come down a little bit, they certainly haven't fallen off a cliff. There's multiple reasons for that. I think most office occupiers are, while everyone knows there will be some change, they don't quite know what that looks like. So very few people have actually pressed the button on any kind of drastic change, unless that's been forced by a change in your headcount. You've lost some employees during COVID, and so then but no one's really pulled the trigger exactly on the way they work just yet. We are seeing it, but very slowly.
Yeah, too soon.
And most prime A office landlords here in Singapore, especially, are still quite bullish on the office sector. We have seen rates come down a little bit, but in some markets they're already back on the up as people are moving back. We've seen, for instance, mitigating factors, or sort of factors working on the other side of the equation. For instance, a lot of construction has been slowed down or stopped for a period. So we're seeing a lot of the new supply really bottled up. Right now, if you're a large tenant in Singapore and you're in the market for a large chunk of office space, you may actually have a hard time finding something that suits you, because a lot of the new supply that you're expecting to come, this year or next year has been delayed.
I think we've all been around the city and seen, especially during the course of last year, seeing projects completely closed down with not a person on, and it's a massive development. And I can only imagine the long-term implications that will have on supply and demand within the region. So as we say, too soon to say now, but something to definitely keep an eye on for the future. So as we've kind of just spoken a bit about Singapore here, I think the next question is just simply, are there any specific geographic hotspots that an investor should be aware of or having a look at?
Yeah, I mean, that's the secret thing, eh? Where are the hotspots? But Look, I think generally, in the residential space, if I can talk specifically, because I think that's a lot of people always looking at that as a leader in terms of an entry point into a specific market. And London has always done well. London, also you can't just look at London, you got to look at all different suburbs around and the different areas. So, but London has always shown to be a strong performer over the last, you look back to the 80s, 70s, and it's just continually grown. So London has always been a good market. Also across the UK, some of these new regional cities are becoming more popular because of transport becoming. There's the H2 from London up to Birmingham, and then it's going to get to Manchester, Liverpool, so people can commute quite easily. And now with this whole work from home kind of dilemma, or this that corporates are dealing with, 2 days at the office, then you can spend a night and then you could be back home for the rest of the week, and you could live in Manchester and pay half the rental or half the price of an apartment or whatever the case is. So I think the regionals, there's growth that we've seen there, and the Crossrail in London is also stimulating that. So it's easy to get now across from the east to the west as a high-speed line. And then we've seen Berlin has been a popular city. It's very, very lowly priced in comparison to other capitals across Europe. Portugal and Lisbon has seen growth. I mean, there's the Golden Visa program there, so that stimulated a lot of investment in across Portugal. I think, and then the Sun Belt, in the US they call it, which is basically the warmer cities. So there's been an influx there's a migration of workers and people, either retirement or just relocating. Even offices are moving to the Sun Belt states, and Florida is a popular one. We have an investment there. We've seen a huge trend in migration. So Sunbelt states, Houston, Texas, this is where the migration trend is, and this is what leads to my next part, I think. And this is a really good little tip. These are a few things that I've shared, but you can go to any little city and you can find those hotspots. And I think to help you find a hotspot, and what our company does is we call it the pie effect, and it stands for, the P is for population. So where you see an increase in population and a migration of people, from an investment perspective, you can let out an apartment. So this is good. I can find a tenant. The second thing is the I in pie, infrastructure. It's got to be close. It's got to be easily accessible. You got to have bus stations, metros, MRTs, close to an airport that needs to get around the globe. So infrastructure is important. And then the last thing is,
I was just adding, especially for retirees in the Sun Belt and that, I think, access to healthcare.
Yeah, absolutely, 100%. Yeah. Then the last thing is economy and employment. So you need to have a stimulated economy. If you invest into an economy that's not growing, generally you're gonna have a problem with population. You're not gonna have people there. You're gonna battle to find tenants. So as much as I've shared a few hotspots here. Use the pie effect. Take that, put that up your sleeve, and use that when you start investing. And that's a strategy that we've applied. We in the student housing space. So we go to universities where we know that there's a strong population of students, and there's a shortage of beds, and then we go in there. So so that's kind of a snapshot.
I think it's useful to also think of it from that perspective of pie. I'm definitely not going to forget that now. Thanks for sharing that.
Sure.
And so, Stef, just riding on what Jason was saying there, we're talking about the US, UK, as we did earlier, Singapore, Portugal. Is there anything else that you've been seeing or hearing?
Yeah, look, Mike, I guess the only thing I'll add is, we've seen, whether it's logistics or commercial or just sort of where you have the bulk of your employees, I think rather than, So Singapore, for instance, has been a big benefactor in sort of what's going on in China, and we've seen a lot of again, one of the mitigating factors that we see in the office environment here is a lot of Chinese tech firms opening and growing very aggressively offices here in Singapore, even during the pandemic. So where I'm getting with that is, we see people sort of diverse. The old adage of having all your eggs in one basket is we've seen people, especially in the logistics sector, making sure that they can keep their supply chains up and running, and they don't want to be stuck with all their product in one country or one city in case something unforeseen, another COVID or another natural disaster or whatever happens in that particular geography. So, we have seen people generally trying to diversify geographically speaking, making sure you got a sort of a balanced portfolio everywhere, so you're not so exposed to any unforeseen things. So I guess that's where we've seen shifts in terms of geography.
I think there's been two kinds of business approaches to the risk mitigation in terms of continuation of business, especially from a logistics point of view that you've seen. You've seen people who are proactive, and they put these plans in place pre-pandemic, where they were looking into having multiple offices in multiple geographies and across time zones in order to try and kind of facilitate trade much easier. So obviously the big businesses have continued to do well, and they've been proactive, but then obviously the people who have been reactive have obviously suffered, and that's now encouraged them to be looking into a risk mitigation strategy like what Stef just outlined, such as, when no one expected the Suez Canal to be closed earlier this year, and all of a sudden all these ships were being rerouted around past Cape Town and to get out to Asia. So having a regional office in Cape Town then would have proved extremely beneficial. So very, very good points there, Stef, and well noted. So I think just for us to close off here, gentlemen, is just, do you have any additional comments or remarks to add to this investment arena discussion?
I think it's been well covered. I think it's been a good chat. Thanks. Just maybe I didn't touch on in our intro. I just want to maybe cover our company. We're a private equity fund manager, but we make private equity easily accessible for high net worth individuals and small family offices. So I know a lot of people think, private equity, you need 5 million to invest. So our company does more, small type of investments, $250, $350 type of $1,000. So we're making private equity easily accessible for the high net worth individual, and it's a passive investment. You don't have to worry about managing a property. We do all of that, and then we sell the property when it's the right time. We understand the market. So just wanted to add that for the listeners, if they're interested. Obviously I'm available to chat.
And what is the best way for people to find you, Jason?
jason.lamb at ip-im.com. So I don't know if you can maybe put that on the opening slide.
Sure, I'll put it in the description to the video. And for yourself, Stef, if people were interested in opening an office space potentially in Singapore or other regions that Savills looks after, how did it reach?
Certainly, my bread and butter is in the office sector, but I also gladly touch on logistics space and industrial space, manufacturing, and even on occasion the residential. But again, all over Asia. So if anybody's got any requirements for office space, big or small, please do get in touch. Myself and my business that we run, we represent tenants only. So it's not like we control a supply of stock and have an agenda to put people in that specific supply. We act 100% on behalf of the tenant and have access to a market holistically, and make sure you find the right property that's right for your business.
Brilliant. So gentlemen, again, thank you very much for your time, and I look forward to speaking with you again in episode 2, where we will be discussing Singapore rental market and what you should know as a foreigner in this country. And I'm really looking forward to that one, specifically as a person who's lived here and moved apartments and not really enjoyed the process and not understood my rights. I think it's going to be very good for the audience to get a feel for that. So again, thanks very much for your time. And
Good, thanks,
we'll
guys.
see you the next